Welcome to Pressure Points. Our topic is Google earnings. As of this recording, shares are down about 2%. They've been kind of drifting lower throughout the back half of the earnings call. I'll give just a high level of what happened. They came in line with revenue and they were about 4% upside in operating income. The stock was up a couple percent, and then they talked about a margin impact. They're pulling forward some hardware products and also a change in depreciation. It's going to have a slight negative impact on margins in the September quarter. They said to expect it to rebound in December, but the stock kind of drifted a little bit based on that comment. But that has nothing to do with what the pressure point is, and the pressure point is related to their search generative experience, SGE, and kind of what's beyond the 10 blue links. And before I get into this, I just want to give the highest level on Google is that I believe this company remains best positioned in AI. It is a holding in Deepwater's Titan fund. And the reason we believe it's best positioned is that they're the only company that has the three most important elements. One is a large language model, their own large language model. Second is related to advanced silicon with their TPUs. And last is products that have more than 1 billion daily active users. They have 6 of those, and so great distribution. So that's the highest level. Let's jump into the pressure point, which is what's beyond the 10 blue links. And the bottom line is we did not learn much. Last quarter, they were doing some testing around this SGE, and they said that they're going to roll it out in the US and I think the UK. They did that. So they've got a lot more data. I'm sure many of you have experienced using this, but they really didn't say much in terms of what it means. They've said that they continue to have great user experience, that it continues to have a positive impact on the number of queries and searches that people are doing, so engagement is improving, but they still really haven't answered the question, which is, what are you going to do to replace the 10 blue links? I believe that OpenAI is going to have a search product this year. I don't think a lot of people are going to use it relative to what Google has, and because ultimately they've got this habitual behavior, but they have to cross that bridge in terms of getting to monetization. They went back to a well-traveled road to remind investors that there was the same question from desktop to mobile, and they successfully navigated that, and that was a net positive for their business. My sense is that this will also be a net positive. I think it's going to be a meaningful net positive, and through our own Deepwater testing, I think that the intelligence of Gemini is on par with ChatGPT, pretty close to it. So it's ChatGPT and OpenAI just isn't good enough. It's not 10 times better to get people to pull from Google to a competing search platform. So that's the pressure point. I do want to make a quick postscript to the quarter, which is related to CapEx. CapEx was more than expected. I believe that CapEx will continue to be higher than expected for the next few years. That's right. This is good for NVIDIA and a lot of the other hyperscalers. And the reason is pretty simple. If Google decides, or any mega cap decides not to spend on CapEx, they'll save, let's say, $100 billion, which is great if that generative AI, if AI never ends up coming to fruition, save $100 billion. If they're wrong and they're a $3 trillion market cap company today, they're going to get blown out of the water, and they're going to be a $500 billion market cap company. This logic, this theme came from Deepwater's Doug Clinton, so I absolutely agree with you, Doug, on the reason why we're going to continue to see CapEx climb higher. I bet Google ends this year up 70% plus. I think the street tomorrow will be up 55% in terms of CapEx. So good news for NVIDIA, and that's a wrap for this episode of Pressure Points. Bye for now.